Hello and welcome to the Business Standard Morning Show. I am Thirumoy Banerjee and here's a look at the stories for the day. Notwithstanding the banking crisis in the US, the Federal Reserve went ahead with its planned rate hike of 25 basis points or bips on Wednesday. However, this time the central bank sounded less hawkish and left its target Fed funds rate unchanged. Fed officials also anticipate that the banking turmoil will tighten credit availability and impact consumer demand in the US. This could help ease the inflationary heat. So how will this affect the Reserve Bank of India's or the RBI's rate hike trajectory and the equity markets? Harshita Singh answers in our next report. The Fed's 20 bips hike was largely in line with market expectations. However, the Fed also delivered some significant positive surprises on the rate hike trajectory. The US Central Bank's Rate Setting Committee, that is, the FOMC, introduced a shift in its policy statement as it moved away from using ongoing increases to the policy rate to needing some additional firming. Besides, the FOMC median forecast showed that the Fed is likely to hike rates just one more time this calendar year. It left the terminal rate or the rate at which its benchmark Fed funds rate will peak unchanged at 5.1% from the last estimate in December. Investors read this as a dovish signal and expect that the rate hike cycle is nearing its end. The US Fed has ruled out rate cuts this year. Markets are still betting that the rate cuts could begin in the second half of 2023 itself.
This outcome clearly gives us a sign that the future for interest rate hikes are going to be softer, and there is a pause coming in the future as well. Though Fed was very clear that in the next year there would be no rate declines, the market seems to believe that the rate would decline, especially in the second half of the year. Having said that, it is fair to assume a little bit of interest rate hike in the next quarter. And the reason behind this being US inflation. Fed is playing a thin line between managing inflation and the economic downturn, but inflation levels in US at 4.7% is way higher than what they want it to be at about 2%. What are the bond markets saying? The US 2-year and 10-year interest rate yields have both come down from a peak for the 2 years at 5% to about 3.8%, and for the 10% from a peak of about 4% to about 3.4%. So these two clearly have suggested that whatever level of recession the US was expecting, that rate is probably going to be a little lower.
Meanwhile, experts expect the RBI to follow in the US Fed's footsteps and deliver an interest rate hike of 25 bips in April, though they believe that a pause in the rate cycle will likely follow post the upcoming meeting. With the headline CPI print tracking above 6% for January and February, we build in an additional rate hike of 25 bips by the RBI in its April policy review, as we peg the terminal rate at 6.75%. Further, the inflation trajectory is likely to decelerate from the quarter ending June, which will preempt the RBI to pause the rate hike cycle. As such, risks to monetary policy will be contingent on expectations of inflation trajectory and external factors such as global financial conditions and trend in commodity prices. Sharing similar views, Nishchal Maheshwari of Centrum Broking remains upbeat on the domestic economy and suggests investors build positions using the current weakness. He believes that the inflation is not a major concern for the Indian economy.
So I think basically RBI may not take a rate hike at all. We have seen rupee being pretty stable. Inflation at our end is not so sticky. So we do not have a very big problem as far as inflation is concerned. So there may be a chance that RBI may do a 10 basis point more of just a representation kind of a thing, rather than actually trying to, and maybe or possibly just skip it altogether. So I think it's now becoming time to buy the tips actually in the market at 17,000. So my broad thought is basically that Nifty will do 1,000 rupees of earning for FY24, and long-term averages have been around 16 and a half. So I think from here to 16,500, I would be comfortable buying the dips in the market. So domestic consumption is the things basically which I've been favoring, given that you have so much turmoil internationally. And if the rates remain higher for longer, I'm very sure basically it's going to lead to maybe a mild to a medium recession in the US. So when in this kind of a background, I think it's best to avoid all international facing sectors. Good to look at the domestic consumption sectors. Banking is our top pick, FMCG, pharma, then cement, construction. These are some of the sectors basically which we like. I think something like 18,500 is what we believe basically Nifty should be there by the end of the year. If the third quarter in the US basically of calendar year faces a recession, if it goes to the fourth year, then you might see a lower number actually.
Hence, equity markets are expected to pin their hopes on the US Fed's softened stance on its aggressive monetary tightening. However, whether the RBI will toe the US central bank's line remains a crucial trigger in dictating the market trend ahead. Bottled water company Bisleri was almost destined to go to the Tata Group. However, both the sides recently said that the 7,000 rupees crore deal is off the table. One of the most famous brands in India, Bisleri, is now moving forward with its new leadership. So what next for Bisleri? Tushar Verma brings you the answer.
In November 2022, it was reported that Bisleri International will sell its majority stake to Tata Consumer Products in a deal worth 6,000 to 7,000 crore rupees. The deal was expected to be completed in 7 to 8 months. The deal, however, fell off the table. A few days ago, both companies said they have ceased all talks regarding the buyout. Had it gone through, Tata Consumer Products would have become the largest FMCG company in India, beating the giant Hindustan Unilever. The packaged water business, Bisleri, is expected to clock in a profit of Rs 200 crore in FY23. However, with the deal with Tata out of the window, what's next for Bisleri?
I think Bisleri could obviously run as a professional organization and a company. There will obviously be other contenders potentially in future. Possibly even now the other FMCG players are in discussion for all you and I know, right? So from that perspective, I don't think there is any issue with the future of Bisleri.
Ramesh Chauhan, the veteran industrialist, and his brothers acquired Bisleri in the 1960s. Since then, the business has evolved and branched out. One of the Bisleri brands is Vedika, which is headed by Jayanti Chauhan, the daughter of Ramesh Chauhan. After the Tata deal did not go through, it was speculated that Jayanti will be the heiress. Reports quoting Ramesh Chauhan seem to confirm. However, Jayanti Chauhan later denied this in a post on LinkedIn. The post has been removed since. So, what is next for Bisleri's leadership?
Hopefully, the promoter has recognized, even in this case of Bisleri, that there is need for a robust senior management team which will be the trustees and take the company forward, irrespective of whether anybody from the promoter family is interested in running the company or not. That is the duty and responsibility of any promoter to think of the legacy of the company beyond their own life.
See, I think one thing we should always appreciate when it comes to family businesses, that family businesses cannot be infinite. You know, like any other thing, I mean, they will survive one generation, maybe survive 2 generations. And the fundamental answer to this question is you cannot take an unwilling horse to the water. So, if the next generation is not interested in running the business, patch-up solutions can only go so far and no more.
The Chauhan family is known to be a creator of brands. The name Parle is associated with the entire family. Well-known brands like Parle-G, Fruity, Apifizz, Bisleri and Vedika belong to the Parle group. The brand Bisleri would have been with the Tata group had the deal concluded. Now, what is the way forward for brand Bisleri?
I am surprised the deal with the Tatas didn't go through, because I think it's a fundamentally very strong, very well-respected and a very well-entrenched brand in its own category, right? It's a very strong brand and a strong candidate for acquisition by any large company at any point of time, right? Now, what happens to the brand as you go forward? I think with a good, strong management in place, with or without the family being fully involved, a brand like this can continue to cruise along for many, many years without much issues.
Experts believe family-owned businesses cannot always remain in the family for generations. This is especially true for the ones that become huge and deal in multiple brands. Bisleri commands a strong brand and has stood the test of time. But how its governance evolves in the coming year remains to be seen.
Mumbai has been in the news for an unenviable reason lately, with a majority of its January days registering poor and very poor on the air quality index. Mumbaikars have been left gasping for breath as cases of respiratory ailments soared. But India's financial capital isn't the only one. The air in the Delhi NCR region remains among the most polluted in the world. Cities like Kolkata, Bengaluru and others are also on the list. So why are Indian cities unable to solve their air pollution problem? Debarga Sannal brings you the answer.
As an unusually cold winter set in and Mumbaikars donned their warm clothing, India's sea-facing financial capital got enveloped in a smog and dust-riddled haze, which has stayed on for nearly 4 months now. Between 2019 and 2022, Mumbai registered an average of 28 poor or very poor days on the Air Quality Index or AQI. Starting January this year, more than 90% of the days in the city saw the AQI range go from poor to severe. This is a 150% rise from the previous year. Swiss Air Tracking Index (IQ Air) ranked the Mumbai metropolitan region as the most polluted urban center in India, supplanting even the Delhi NCR region during the week between January 29 and February 8 this year. Mumbai was also declared the second most polluted city in the world during the same period. Mumbai isn't the only Indian city to find its air unbreathable though. A recent report by the Center for Science and Environment showed that Delhi, with a winter average PM 2.5 level of 151 units, remains the most polluted megacity by a large margin, though it has shown improvement over the past few years. PM 2.5 levels are considered to be satisfactory if they remain between 25 and 50. Among other megacities, Kolkata and Mumbai are the most polluted right after Delhi. Bengaluru and Chennai performed the worst when PM 2.5 levels during this winter are compared with the average of the previous 3 winters. The two cities have recorded a 15% rise in air pollution. The figure for Mumbai is 14%. But why are India's urban centers unable to control the rising air pollution? Is there a lack of sufficient regulation on the part of central and state government? Or is there an implementation gap?
There are ample regulations and policies on ground that we are talking about. India has recently come up with the National Clean Air Program in 2019, which talks about reducing particulate matter by 24, by introduction of electric vehicles, electric mobility on ground, Swachh Bharat Abhiyan. So, and the large, the Air Act of 1981 is there. So, National Clean Air Program, basically, it talks about implementation by the municipal corporations or the urban local bodies while the execution part does come under them, but they don't have the technical expertise, or there's lack of manpower with them, the technical manpower.
What are some steps that need to be taken urgently in this regard?
In most of the Indian cities, only 30 to 40% of the pollution is caused because of the sources within the city. Rest of the pollution comes from the outside boundaries. So first of all, definitely there is a need to change our approach from being city-centric to rather an airshed-based approach. Secondly, from the implementation perspective, if you will see, with a flow of funds with NCAP and the 15th Finance Commission's focus on air pollution, so there is also a need to strengthen the audit mechanism. So there has to be a performance-based audit system or the audit-based payment systems. Right? So most of our Indian cities are dusty. So low-hanging fruit would be to manage the dust emissions. Then we can move on to the critical sources, which are like combustion-based sources. Then third, most of these MSMEs, they face financial crunch. So they are not able to implement air pollution control devices.
Experts believe that there needs to be a fundamental change in our approach to tackle air pollution. Spreading awareness among the public and subsidizing cleaner fuel sources are some steps that the government must take on an urgent basis.
The takeover of Credit Suisse by the UBS Group has been a hot topic for the last 2 weeks. Last week, after the deal, Swiss authorities and the UBS Group announced that they are writing off the $17 billion worth of AT1 bonds of Credit Suisse, leaving investors in a fix. But what are these AT1 bonds and why are investors so worried? Raghav Agarwal explains.
The Swiss government brokered takeover of Credit Suisse Bank by UBS Bank has kept global markets on their toes. While governments and regulators are making frantic efforts to avoid contagion, banks are reassuring customers about their financial health, and investors are rushing to find safer instruments to invest in. The investors' fear was accentuated after the UBS Credit Suisse deal wiped out $17 billion worth of additional Tier 1 or AT1 bonds of Credit Suisse. The move by Swiss regulator FINMA was reportedly aimed to protecting the financial system. This spooked investors who are now assessing if this can also happen to their AT1 holdings in other banks. AT1 bonds are a type of unsecured perpetual bonds that banks issue to improve their core capital base. The money raised through these bonds, also called contingent convertible bonds, is kept aside as a shock absorber by the bank. When in trouble, banks can convert AT1 bonds to equity or be written down. These bonds were created in the wake of the 2008 financial crisis to absorb the losses. Using money raised through these bonds reduces the chances of a taxpayer payout. These are also mandatory under Basel III norms. The banks must maintain capital at a minimum ratio of 11.5% of their risk-weighted loans. Of this, 9.5% needs to be in Tier 1 capital. AT1 bonds fall under this type of capital. Because of a higher risk, they offer a higher yield. Generally, when a bank fails, the bond holders rank higher in the pecking order than the shareholders. But in the case of Credit Suisse, the shareholders will receive some compensation while the bond holders will not. The question of hierarchy has spread panic across bond investors with other banks. The main reason shareholders will get compensation and bond holders will not is that Credit Suisse did not follow a traditional bankruptcy. It did not go through the bankruptcy process and was taken over by other banks. So, the rules of a typical bankruptcy do not apply here. The banking regulators in the European Union and the Bank of England earlier this week reassured AT1 investors and said that in case of future bank crisis, they would be given priority over shareholders. I will achieve, I will fly high,
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
On Thursday, Swiss authorities defended their decision and said they wrote off the bonds because it was legally watertight. That's all for today. For more news and analysis, please log on to business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.